Hello, and welcome to the August Market Update presented by Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. July was a good month for the markets. U.S. markets were up 3 to 4% for the major indices. The NASDAQ was up over 6% as investors got a lot more confident. International markets also did well. Both developed and emerging markets were up over 5%. We don't get months like this too often, so let's enjoy it while we've got it. But the question is, why were things so good this month? A couple of major reasons. First of all, fundamentals continue to improve. Here in the U.S., we got several weeks in a row of positive economic surprises. Jobs came in very strong. Consumer spending came in very strong. Everything on the consumer side actually surprised to the upside. Consumers continued to be both able and willing to spend. And since that's 70% of the economy, that's a big deal. The problem is on the business side. We saw a serious disappointment in durable goods orders. Companies are not investing in equipment, in buildings, and actually that has been a problem for the entire first half of the year. And because of that, and despite the strong consumer, we saw economic growth for the second quarter and for the first half as a whole come in much weaker than expected. Now that's concerning, but at the same time, we're also seeing improving trends even on the business side of the economy. We see manufacturing companies, surveys show they're moving from contraction to growth. The service sector is moving from growth to stronger growth. In other words, even though we've had a weak first half of the year, signs suggest that things are indeed getting better, and in fact the consumers will continue to support that. Even abroad, we're seeing things continue to get better. The main risk that was concerning markets, the Brexit, the so-called British exit vote from the European Union, shocked markets in the short term, but then the strong fundamentals had them bounce back. That's a signal of strong underlying strength. Even the Fed, in its most recent statement, was notably more positive, not only on the U.S. economy, but also on international risks. In fact, they didn't mention them at all for the first time in a while. So things continue to get better. From a stock market perspective, if you look at earnings, they're coming in much better than expected. And actually, they're continuing to get better. Still not great, but that, combined with the fact that the fundamentals are improving, suggests we're going to continue to see improvement. We're continuing to see a reduction in international risks. Europe continues to grow despite the Brexit turbulence. China looks like it's stabilizing. Even some of the political risks, such as the Turkish coup, haven't really rattled markets at all. So overall, we close out July and move into August looking fairly positive. Risks remain, of course, but right now I think the signs are pretty good. I'll talk to you next month, and we'll see if that continues to be the case. Thanks for watching.